And it is time for Talking Numbers. It seems like gold is more popular than ever on Wall Street and Main Street these days. The precious metal has had an impressive run over the last 10 years, while the S&P 500 has tacked on just 16%. Gold is up 464%. But with the metal sitting at all-time highs right now, has gold become overvalued? Let's tackle the question right now with Sam Stovall, Chief Investment Strategist with Standard & Poor's. Sam, is gold overvalued?
Hey, Maria. Well, I guess it depends on relative to what. If you compare it to stocks, I don't think gold is overvalued, or if it is, not by much. The average premium that stocks have over gold on a price basis is only 5% going back to 1971. Of course, there have been differences. Back in August of 2000, stocks traded 5.5 times above the value of gold, whereas back in January of 1980, gold was 6 times as expensive as stocks. Today, gold is about 8% higher than the value of the S&P 500.
What's driving it?
Well, I think what's driving it is concerns over the viability of currencies today, looking to gold as a reserve asset, looking to worries about sovereign debt issues and looking upon it as a safe haven, concerns that the Fed might be behind the curve in terms of inflationary expectations, and with interest rates remaining fairly low, the cost of carry remains attractive.
Okay, and you say that gold is not overvalued relative to stocks. Does that mean you're saying stocks are overvalued?
Nope. Also, in this case, I believe the stocks are not overvalued. If you look to the trailing gap PE right now, it is equal to the median since 1936. If you look to operating earnings results on a trailing PE basis, we're trading at a 15% discount to its long-term average. And looking at S&P's Capital IQ estimates for 2011, we're basically trading at less than 14 times forward estimates.
Okay, let me ask you about sectors within the broader market, though. I mean, we're just starting the second quarter here on Wall Street. Is there any seasonality to the gold trade or any other sectors going into this period of the calendar?
Well, specifically going into the second quarter, we find that we're coming off of the worst quarter. Since 1971, gold is up only 0.5% in the first quarter, up 1% in the second quarter, 3.5% in the third quarter, and 1.9% in the fourth quarter. Of course, past performance is no guarantee of future results, but it does appear as if the better quarters lie ahead.
What's the bottom line, Sam?
Bottom line, Maria, is that I don't think that gold is overvalued. If you look to our fundamental analysts as well as our technicians, there is longer-term price appreciation ahead. $1,800 is our chief technician's target. Also, seasonally, we have better quarters ahead, and I think that stocks also look fairly valued.
All right, 1,800. Wow, that is 1,800. Now we're at 1,457. Sam, great to talk with you as always. Thanks so much for clearing all that up.